What's up everybody, Brad here with the Money Dad channel. In this video I'm going to be going over a pattern that I see on the stock chart of QQQ. That is an ETF that tracks the NASDAQ 100 or the 100 largest stocks in the NASDAQ. If you're not familiar with that ETF, it is one of the biggest ETFs in the world, one of the most common ETFs in the world for investing, and one of the best performing ETFs in the stock market as far as performance goes, right? Compared to the S&P 500. So definitely check that out if you're not familiar with QQQ. We're going to be going over a technical pattern, a chart pattern on the stock chart for QQQ in this video. So if you like chart patterns, if that's your thing, stick along, watch this video, hit that subscribe and like button for me if you're not a subscriber yet, and let's get into it. So I'm in TradingView. I have the daily candlesticks pulled up for QQQ. And here I'm going to show you a stock chart pattern with some pretty significant upside projection, and I will give you a price target based on the size of this stock chart pattern, and I'll show you how to do this yourself as well. I'm going to go through all the motions of how I did this, how I found this, and how I projected out to the target. I'll also give you the catalyst that I believe is going to be the reason for this big move to the upside as well. Let's just start with the catalyst actually. So the catalyst, I believe, is going to be higher interest rates, and higher interest rates is going to positively affect large cap stocks, which this ETF tracks, right? The QQQ is the 100 largest stocks in the NASDAQ, so the NASDAQ 100. So you're talking about Apple and Microsoft and all these massive companies. So it's the largest 100 companies. So why does interest rates, why are interest rates good for large stocks? Well, it's actually kind of a it's not bad for it kind of thing. High interest rates are bad for small stocks because small stocks or unprofitable companies, they use debt to finance their operations and their company, right? They're not profitable yet, so they have to use debt to finance their operations. Well, large companies don't have to rely on debt as much. So as interest rates start going up, these small companies have to pay more interest on that debt, and it becomes more difficult for them to pay off their debt or to keep growing, right? Well, large companies don't have that problem because they don't have to rely on debt. They're profitable, right? So that is the reason why it's not necessarily a good thing for large cap companies that interest rates are going up, but it's good for the stock price because you're going to see investors shifting from small cap stocks into large cap stocks because of that reason, right? They don't want to be in these small cap stocks because it's going to be difficult for these small cap stocks to grow, whereas that's not as much the case for large cap stocks. So even though higher interest rates isn't great for large cap stocks, it is going to be good for the stock price of large companies because investors are going to be shifting into these companies. I hope that made sense. If it didn't, I can clarify. Let me know down in the comments below if I need to kind of expand on that, but I think I got the point across. So that's the catalyst for this move. You know, we can even type it into TradingView, catalyst, so that it reminds me when I go back and look at this chart, you know, tomorrow or the day later or whatever, why I think this is going to make this move, right? So catalyst is going to be interest rates, something like that. Our catalyst is interest rates. Okay, we've got that in TradingView. We've got our little note to ourselves. Now I'm going to manipulate this chart a little bit so that I have wiggle room. I have some room to move around and do some lines and stuff. So let's show you the pattern that I'm talking about here. Also, you can see I have the 200-day moving average on here because I was playing around with moving averages, and I noticed that the 200 acted as resistance really well, these two spots right here on the QQQ back in February and then late March. So I noticed that it bounced off that really well, so I kept that on there. All right, so let's start with a line right here connecting these two tops. We're going to move this out so that we have some space for our projection later on. So we have a line right here. It kind of looks like a double top, but it was a bear move down under and then came up into a double top. So it's kind of a strange double top. Usually for double tops, you want to see it come from down below up into it and then back down. So I'm not really calling that a double top, but it works for the pattern that I see, which is, I'll just go ahead and draw it really roughly with this brush. You got this right here and that, and then it looks like we're forming, and it hasn't formed yet, a right shoulder, right? So you've got your left shoulder, your head, and your right shoulder, right? So this is an inverse or upside down head and shoulder pattern. This is pretty significant. I really like head and shoulder patterns. I look for them. I will go through all of my stocks on my stock list frequently looking for head and shoulders patterns because they are pretty accurate if it completes this swing up to the neckline right here. And by the way, this is the right here. This is the neckline. This blue line that I drew. If this right shoulder completes and gets up to this neckline, it has a pretty high accuracy rate of completing the trajectory to the price target. It doesn't happen every time. It's not guaranteed. It's not 100%, but it's pretty good odds. And this neckline is pretty close to flat. It's not perfectly flat, but it's pretty close. And I really like placing trades on patterns that are going through flat lines. That's so that, you know, if it comes up and then traces back down and then cuts back underneath and we have a stop loss set at that neckline, you don't lose money. This neckline is actually ascending, so you're actually still going to make a little bit of money if you get stopped out at the neckline. So that's always a good thing. Whereas if it was something like, you know, a pennant or a flag, something that has a descending resistance line at the top, if you have your stop loss set at this line and we break out and then come back down to it, you can still lose money even with the stop loss, right? So when you have flat horizontal lines, that's good because you're not going to lose as much money on a losing trade. Of course, we're not trying to have a losing trade here, but being realistic, you know, not every trade is a winner, right? So when you do have losses, you want to cut them quickly, cut them so that you're not losing a lot of money. You can move on to your next thing. Anyway, getting off on tangents here. Let's get into the projection, right? So you got your inverted head and shoulders. You got your left shoulder, your head, your right shoulder. Where the plan here is for this to turn around, come back up to this neckline, break through, and it could head straight up to the price target, or it could come back and retest this neckline. Sometimes it likes to come back and retest. So the plan is, if it does do that, it's going to come up, retest, and then bounce off. It's going to act as support and head up to its price target. The price target is pretty nice on this one, and we can even make it even more. You can make more money on this if you get into a leveraged product. Something like TQQQ is a 300% or 3x leverage of the QQQ. So you could do something like that and get a lot more exposure. It's wilder swings to the upside and downside. So there's a lot more risk, but there's a lot more reward potential involved if you go the TQQQ route. If you want to make this trade with less risk and less reward, just stick with QQQ. It's that easy. And by the way, I say all these things, not a financial advisor. This is just, you know, my personal opinion, my personal observations. I'm just doing this for fun, guys. Please do your own research when you're making your trades. Don't base your trades just off of my videos. Okay, so let's get to the price target, right? So we see this is the general idea here. We should swing up to the upside, possibly retest this neckline, and then keep heading to the upside. So let's figure out what that target is going to be to the upside. And we base that off of the distance from the neckline to the head. And then we project that up from the neckline. Okay, so let's clear some of these things out so that it's a little bit more clear what we're doing here. All right, so we'll take our ruler. Well, let's move this little neckline word over here. Take our ruler, measure from the bottom of the head up to the neckline, and we get approximately 17% or 53, almost $54. We'll go with 17% because it's a nice round number. So that's the distance from the head to the neckline. So now we're going to project that to the upside from the neckline, 17%, right? So project that over here. Let's say it cuts up, comes back down, it's around here, 17% from there. Oh, I don't even have enough space. I'm going to have to move this chart even further up. That's a good thing, right? That means this is a pretty good projection. Let's say right about there, $437 on the QQQ. We're currently sitting at 373. So, I mean, you're talking about $60 of upside. It's pretty sweet. I mean, it's 17% from the neckline, and we still got a little ways to go to reach that neckline. So you're talking about pretty good chunk of money on this move, right? Going from, we're not at 373. What am I talking about? We are sitting all the way down here at 338. So 338 to 437 is like $100. $100 move on a $338 ETF. That's like 30%. That's like a 30% move, right? So pretty significant swing to the upside we're seeing here on the QQQ based on an inverted head and shoulders pattern. And like I said, if you want to get even crazier with this potential trade or potential price target, you could get into TQQQ, which is a 3x, a 300% leveraged version of QQQ. So much higher reward potential, also much higher risk potential, right? So let me know down in the comments below what you see here. I also see this little gap right here to the upside, so that's a good thing. You know, gaps tend to get filled sooner rather than later, so we should see this swing to the upside to at least fill that gap. And obviously based on this chart pattern, we want to see it keep going, break through this neckline, and then just keep heading up into that 430, I believe I said $437 range. So we'll call it 437 as the price target. All right, price target. That's not right. That's weird. Price target $437 based on the head and shoulders pattern, right? So now I can start cleaning up my chart a little bit. We'll probably take that off. Anyway, that is all I've got for this video, guys. I hope you liked it. If you did and you have not hit that like button and that subscribe button, please do so. You can check out all of my other videos. They are similar. I do some different things now. I got all kinds of stuff on my page, but I do have some price predictions like this as well. So if you like this kind of stuff, that stock chart pattern analysis and price targets based on stock chart patterns, go check out my my page. I've got some videos like this. I've also got some other stuff. Pretty much all of it is related to the stock market and using TradingView or FinViz tools like that to you know, kind of check out stock market stuff. So hope you guys enjoyed that. I'll see you in the next one. Thanks. Bye.